hope everyone's still energetic on the session. We've got a very exciting sort of topic, which is actually very close to my heart. It's something that I've been an operator in, and I've had the luxury to see it sort of grow from an operator lens perspective, and also pivot sort of direction to be able to sort of cater to a different lens on supply chain. So just to give you a quick roundup on what I have done, right? I mean, I used to be an operator running Finovate Capital, which was basically a supply chain financing company. So I've had the pleasure of, going to mid and small corporates and enabling financing for their retailers and distributors. I've also had the pleasure of being the first formal financer for these guys. And I've also had the pleasure of seeing 5 other lenders come in and create a price war for these guys. But where it really lacked is the deep tier where the financing was still not happening, right? I mean, from an inclusion perspective, the inclusion was what we saw missing. So we pivoted to basically something called BharatNXT. And BharatNXT is now catering to absolutely the bottom of the segment in terms of MSMEs. And these are the guys which are micro entrepreneurs, right? Which don't have formal lines. So how do you bring in formalization to these guys? Has been a challenge for us to see and use the technology, use the infrastructure, use the innovation that has happened in this space. So rather than me speaking about it, I'd love to pose it to my esteemed panel in terms of talking about the space. If I may ask Anurag to come in and give us a quick overview of the space, the evolution, and how you've seen supply chain financing pan out so far.
Thanks. Thanks, Akshat. And I agree. I think it's an afternoon session, so we'll try to keep it interesting as much as we can. I think at the outset, if I just paint a very broad picture, right? I think currently, if you look at supply chain financing, and it's a pretty broad term generally, I think the formal supply chain financing market in India is around $22 to $25 billion, give and take a few. It's around $24 billion. That I think has grown nearly mid-teens, like 15 to 18% in the last few years. I think way back in 2015-16, when we were scratching the surface, it was around $8 to $10 billion. It's already touched $24-25 billion as we speak. And based on the recent estimates and the work that I think we've been doing, I think it's going to continue to grow for the next at least couple of years in the mid-teens, which is 15 to 18%. It is one of the fastest growing segments in the MSME space. So I think that's a little bit on the outside, but I think the most interesting part is not the current size of the market. The real interesting part is what you just mentioned, which is the untapped potential. If even reasonable estimates have to go, I think the actual supply chain untapped opportunity in India is around $230 to $250 billion, which means that we are actually less than or around 10% penetration in terms of the size of the market. That's the real opportunity size for collectively every one of all of us right here to really formalize and kind of tap. The second thing that you mentioned in your question, so that's a little bit on the outside, but the second thing that you mentioned is on the evolution, and there are few of the tailwinds which are genuinely working for the market. Number one, I think, is the whole emergence of formalization of the economy, right? Through GST, through KYC, I think that's one big thing. Second big thing is emergence of platforms. And when I say platforms, things like TREADS, RXIL, and Bert will obviously speak a lot on the interoperable platforms as well, and ONDC. But the emergence of the platforms is the second big tailwind. Third, I think the corporates are beginning to realize the only way to unlock supply chain or a value chain value is through financing. And I think we'll speak a little bit about that also, which is what the big corporates in India, like a Jindal or an L&T, are actually beginning to kind of do. So those are 3 big things. But at the outset, if I have to summarize, I think large opportunity of 250 odd billion, 10% penetration currently, growing at mid-teens, around 15, 16 odd %. Huge market for all of us to kind of, and big tailwinds to kind of support. That's a little bit of executive summary of, I think, where we are.
No, thanks for that, Anurag. And maybe if I can ask Mayank also to come in from an operator lens perspective. right? And how have you seen, the evolution? And you've been in the industry for a long time, right? And help us understand some of the nuances, even how the onset of Treads has also helped, right? It came in almost, it was announced in 2015, they launched in 2018. How have you seen the evolution of that? And, just help us through the operator lens perspective.
Sure. I think Anurag summed it up well. Supply chain finance, while very large, has a huge potential, significant runway to go ahead. It's still actually a very nascent industry, right? I mean, if 2015 was when we first started seeing sort of green shoots in this space, it's still nascent. It's less than 10 years old. What Treads has helped us do is actually to take this off quickly. I mean, Treads and the numbers that you see across those 3 providers, and there are new additions as well, we've seen significant growth, doubling every month or doubling every year. We've seen the volumes hit $1 billion plus a month. And what Treads has managed to do is to grow acceptance of supply chain finance as a mainstream product. And that is what, to your question, I'd probably say Treads has helped us do. Now, in terms of what we've seen as an operator, I'll probably just take an example. I mean, supply chain by itself is very complicated. Let's take the example of the auto industry. An auto industry or a car has about 30,000 components that go into making of a car. It starts from a nut and bolt, goes to a wiper, the machine itself, the chassis, the tires. There are 30,000 parts that go into making the car in totality. Now, how does an auto manufacturer work? It works through suppliers. The suppliers work through supplier. So you have 6 or 7 layers of suppliers that work together to put the car into play. Now, for this symphony to sound melodious is a very tricky balance, which means even if there is a small break in this process, the car won't be in front of you. Now, one of the reasons why this symphony fails is absence of credit where it's needed, absence of capital where it's needed. And that is what supply chain aims to solve. And the minute you're able to solve the supply chain enigma, not to the first tier of suppliers, not to the second tier, but going deeper, is when supply chain will really help in bringing down costs, bringing up efficiencies as the car reaches you. Thank you.
No, that's great. And that also brings me to the next question. See, again, while supply chain has been great and has grown very well, and we see the potential as well, right? What has been some of these challenges which have prevented supply chain financing maybe from reaching its full potential? Again, maybe if I can start with you, Mayank, on this one, to walk us through some of those challenges, maybe even share some examples to keep it interesting for us.
I'll not name companies because many of them will be in the room as our clients, but
we can try.
but going back to the same example, an auto OEM, suppliers, and so on and so forth, right? Now, what does a supply chain finance enable? It enables the player in this supply chain with the best credit rating to leverage their rating and provide funding to the value chain, you leveraging their rating. And this is what the financiers do, right? On the basis of the promise to pay by the best rated credit in the supply chain, they offer credit to the suppliers. That's really the premise, and in theory works really well. Now, what actually happens? In reality, let's say a large OEM, auto OEM, will have a medium, micro, small and medium, the medium enterprise as their supplier. A medium enterprise is likely to have a small enterprise as their supplier. A small enterprise will have likely to have micro enterprises as their supplier, and so on and so forth, right? So as you move further away from the anchor, the size of the MSME just keeps shrinking. That micro enterprise might just be making a nut, a bolt, right? What supply chain has aced in the last 10 years is to make sure that the medium enterprises gets credit at the best terms possible. In time, when needed, at terms that make sense. What supply chains not managed to ace is to make sure that it doesn't stop at the medium enterprise. It goes one level further, and more importantly, goes 2 levels further. And that's to the micro enterprises. And that's where supply chains failings thus far have been. And that's where the $220 billion of opportunity that Anurag alluded to lie. How as all of us as financiers, as market makers, get together, create the protocols, and I'm sure we'll cover that during the session, to make sure that it is feasible, it's practical, it's cost effective to service that opportunity is what supply chains growth will come from.
Anurag, I know you also had some good examples for us. Would you like to share?
Yeah, I think for me, I think the reason why we have not been able to scale up or not scaled up as fast, or I think is number one, the dearth of data in tier 3, tier 4 kind of suppliers, right? The more we go further away from the anchor, the dearth of data is something that is not there, which is whether it's GST, whether it is KYC documents, or whether it's basic invoicing details, right? I think that's just not available. Number two, from an operator standpoint, and I know our friend is here, I think the banks also from a policy standpoint, I think need to kind of work together to say, what will it take for us to actually service or give a loan to that tier 3 guy? I think it's just not in their radar. I think very happy to serve the anchor and the anchor -1. Number 3, I think the value proposition on the products, right, which is not just financing, but the value-added services around financing, I'm not too sure that we have been able to crack that portion yet, which means for a particular value chain, am I able to provide that MSME with the right kind of tailored value proposition? For example, if you are in a construction industry, you get a contract, the tier 3 supplier has very different needs than the anchor. And the financiers or the banks need to actually think through what it takes. So great value proposition, focusing on the needs. Number 2, policies and products by the banks. Third, I think the dearth of data. I think these are the 3 key challenges, at least from a structural standpoint.
And sorry, I'll just interrupt and add something, Anurag, if that's okay. I think the anchor, and I go back to the auto example, for the car to work, the micro enterprise has to deliver that nut. Without that nut, there's no car. But today, the anchor, the auto OEM, is very focused on making sure that the medium enterprise services his requirements, delivers the products, and so on and so forth. For supply chain finance to truly be representative of the country and the value it brings, I think the anchors have to do more in paying better attention, greater amount of focus on the strength of the deep tier value chain. And I think that's something that we will work with our corporate clients in helping them see the value in helping sustenance into the deep tier supply chain.
No, I think very important points, right? And for me, this really hits the nail on the head. Because supply chain finance fundamentally is leveraging the credit of the credit profile of the larger guy, right? You're a smaller supplier, retailer, supplying to an OEM. The financial institution is taking a call on the larger OEM. Now, when we go down the chain, how does that translate, right? How do you verify the authenticity of the data? How do you verify that the trade has actually, or the transaction has actually taken place? Which is where the challenges of tier 2, tier 3, and the deep tier have been there. 90% of the MSME base is basically the sole props and the informal micro entrepreneurs, and a lot of them are transacting within each other, right? How do we bring this level of sophistication down, right? And I think, sorry, Bertram, we kept you away from the conversation, but we were building it up for you, right? This is a very interesting topic, right? I mean, how do you really bring that down to this segment to be able to now bring this segment in the SCF fold as well?
I think it's been brilliant listening to all of you. I think you'll set the stage for me really well in terms of also taking a very first principles view on the problem at hand. I think beautifully articulated on the opportunity which is there for everyone to unlock. But if I take a step back from what we know today and look at how it works, like you just articulated, I think, Mayank, so beautifully about the large anchor to the last mile supplier. If you were to take a view of how do you identify the KYC of the small guy without the anchor's involvement today, and for a certain supply chain to work, today you need the anchor to sign on the creditworthiness and on the know your customer per se. of that last mile entity in the chain. But what if I take a different view, saying today that is the only way that exists? For us to service that last small supplier or the end of the chain better, independent of that anchor, how do I give him competitive offers when it comes to financing? Does the current technology and the information architecture allow for that? So taking a step back, what we're looking at doing is two folds. One is on KYC and the second being on data. How do we look at building a stronger KYC repository for MSMEs at the bottom of the scale, where they don't need to worry about pulling only one element of data linked to GST, which is currently available? How do you look at bringing all elements of the information of that MSME at the point of onboarding them onto new age platforms? So is there an opportunity to create a new class of platform-based lenders to MSMEs, working with multiple financiers, getting a complete KYC of that MSME in an extremely simple way, which means that with just 2 or 3 consents, you pull all of the information about the MSME, right from their Udyam to their registration details, to even if they have licenses with them. Is there one single way to do that? Currently it doesn't exist. It's broken. And if I'm an MSME or if I'm a small entity, I have to go and fill 10 different forms and go through 10 different flows, which is extremely cumbersome. So the KYC currently, the architecture which we have today does not support for this. And like I said, the data interoperability, you touched upon that, Mayank, does not exist. The data that sits in one supply chain is isolated in a silo to that supply chain. No one else currently has access to that. How do we make this information visible to other entities looking at giving a competitive financing offer to that last supplier? I think that's what we're looking to break in terms of silos with even technology like ONDC. ONDC is still at a very nascent stage, I would say, on the B2B side of it, but we have actually gone deep into the market, studied tier 3, tier 4. I've been to the ground myself to study how trade works in rural markets. And we found very interesting feedback saying that if you're able to give me as the end retailer a wider supply pool of different suppliers, irrespective of the anchor who's signing off on me, and if I now have the option to choose, that gives me more power. So I see even in the consumer market today, and all of us in the room would agree, it's becoming more of a buyer's market, where the options that we all have as digital savvy people are very high. But even in rural India with some new tech, we are building in a consumer-friendly discovery of finance. Why can't we take that to the last mile suppliers as well in the that part of the economy which needs it the most?
No, very interesting. But Bertram, one thing, so great that we are creating the KYC and the interoperability of KYC. But what about the transactional data, right? I mean, what you alluded to in ONDC is a buyer-seller transaction. How are we going to solve that problem? That bring in trust in that transaction, because at the end of the day, supply chain is financing that particular transaction and building that trust within the two parties.
So we're looking at creating data symmetry across anyone who wants access to the profile of this individual. And we're looking at technologies like blockchain. In ONDC, we have something called Confidex, which is a network that we're building to have scores of every seller on a network, which is open. So if I have enough knowledge about a certain seller, that this is the history, the number of transactions, the typical monthly turnover, the size of ticket, the kind of product SKU, I can drill that down to any level of detail as a standard schema. And if at some point of time, like I said, this is still being built out at an early stage, if that is detailed enough for a financier to take a call on, I understand the profile of this particular supplier, that's new data, which they never had access to before.
Which is great from a credit perspective. Supply chain perspective, I mean, how do we differentiate that, right? Because we have an additional layer of data, which is their month-on-month transaction, their trends of transaction with basically between two parties. Can we leverage GST data? Can we leverage invoicing data? Can we leverage a lot of the other data that we have got? So for example, I mean, a lot of lenders have also started looking at, say, have the goods reach from one place to another, e-way bill data, FASTag data. Can we start to integrate a lot of that to bring in more visibility on the supply chains? Because see, what you're talking about is fantastic, right? And that's helping credit overall. can we go beyond to sort of, bring this from a supply chain perspective as well?
No, absolutely. Like I said, some of these existing data sources like GST data is already available on an infrastructure, a DPI, like account aggregator, which we proudly talk about. But just GST data alone is not adequate. We are looking at multiple other sources of data which should get tagged to the MSME's credential, which I spoke about earlier, saying if I am able to link with the single identifier or maybe 2 or 3 identifiers of the MSME, can I pull all of this history at periodic intervals to, as an independent party to this value chain, get visible access to it? So like GST, as an example that you give, I'm talking of a much broader set of data which cuts across other data pools, which could be even payouts, utility bill information, various data points from the life cycle of the MSME. And that's something which is for us to define what would those priority asks be from the sector for people building this out. We are happy to take it forward to both those government departments, ministries, to regulator, and the MSME ministry, who's very keen to support this. So we are, very keen to hear feedback as well on what would be the minimum criteria to start with to create this interoperable data set and then build on it.
No, super. We'll leave a few minutes in the end for the audience, and then they can come up with their request as well that time.
But I may just add, I think, just to build on what Bert was saying, I think there are 2 aspects of the questions that you had, right? How do you build trust in the transaction? And number 2, what's the real, I think, the data, the alternate data that we can provide to the financer? And if you really look at the supply chain, I think currently the real big divide in India is between the have and the have-nots. And the have and have-nots is not the people who have a mobile phone versus not. It's the person who's actually having a GST number versus not. If you have a GST number right now, you can walk into a branch, I'm sure you'll get formal financing through a mudra or somewhere else. The challenge is for people who do not, the challenge is for people who do not have a GST number. And the real S-curve of growth in MSME will come when we are able to get people without the GST into the formal economy. And the way to do that is 2 or 3-fold, right? I think Bert kind of touched upon it. I think there are alternate data sets which are available, which you can now create a profile of. Now, whether it's utility bill, whether it is verifiable orders, whether a corporate or an anchor is giving some kind of a guarantee, or whether it's a basic KYC detail or a shop detail. I think those are sets that you can actually start using. Number 2, I think the point that you made, within the transaction, a central registry for verifiable invoices is something that a lot of the folks are already talking about. I think one of the biggest challenges in invoice discounting or receivable financing right now is that the lenders don't trust whether this invoice has been hypothecated with somebody else or not. If a central registry is able to actually do that, then you will unlock completely different set of growth which is there. And that is where you start trusting the network in some sense to actually add the financing as well on top.
Thanks, Anurag. Maybe Mayank, I mean, see, Threads has also solved this problem to an extent, but of course it's limited to, again, 500 crore corporates that are listing their invoices on the platform. But it's still not going below, right? Is Threads the solution to this? I mean, as opposed to, as to what Anurag said in terms of, GST and some of these guys not having GST in there?
See, I think...
and maybe if I may add one more question, right? From a lender's perspective, from a bank's perspective, do you hate Threads? Do you love Threads? Because, I mean, that's the elephant in the room. I mean, it's been great for the MSMEs, but for lenders, it's like, it's a price war.
Let me try to distract you from the question itself first off. I think Anurag made a very interesting point. I'd like to sort of go a little deeper before I answer your specific point, right? Again, going back to the auto OEM example, when do the micro enterprise supplier, when does the micro enterprise supplier really need money? He or she needs money the day he's been told to manufacture the nuts, right? He doesn't need money after he's delivered the nuts. So at the time a purchase order is issued is when he needs money, because he may or may not have cost-effective capital available to manufacture what needs to be done. And therefore, this concept of a verifiable purchase order is very important. So not only do we need invoice and genuine invoice, of course, but where we really need to solve this is the purchase order itself. The anchor issues a big purchase order to the medium enterprise breaks that purchase order into smaller purchase orders that are given to the small enterprise. It's further brokered down to the micro enterprise. And that's where the credit requirement starts. And that's where what Bert's putting together goes such a long way, because at that stage, the anchor takes no responsibility. The anchor is saying you manufacture, you complete your performance, and then I'm on the hook. So, you know, all of what we're saying is actually tapping into the pre-shipment stage of financing. To your question on whether we like trades or not, right? I think we banks like to protect our margins, right? And the minute you put something out on a public platform, you're taking away some of the margin. But that gets offset to a large extent by volume. Now, what Threads has done, it's brought a significant amount of acceptability to supply chain finance itself. For example, the public sector, the big government public sector entities had stayed away from supply chain finance to a very large extent thus far. With Threads, you see them coming on board. And as the largest buyers in this country, it's great that you have them on board, because banks such as ours have access to that opportunity, which we otherwise didn't have. So to that extent, great for us in certain ways. I wish the pricing was better.
How would this evolve in the future, right? Because see, I mean, everybody has access to the data on the platform.
Yeah.
Can we go beyond? Can we look at some of the data points that we talked about, that Bertram and Anurag talked about, and use that to supplement, because there's still a lot of invoices which are not financed on Threads as well.
100%.
Right?
I
So,
mean,
you know, can you do that with additional data that can come in, which can be outside the platform?
see, I think one is data, right? And you know, we probably 24 months into data, a reasonable quality of data being made available, right? Now, typically banks run credit models. They must be using this data and making lending decisions. They're watching this portfolio for performance. As they watch portfolio for performance and figure out what their NCLs are, they'll start getting the confidence to use this data to scale. Today, I don't think, I mean, barring some occasional pockets of success or otherwise, we don't have a lot of history to rely on. And therefore, to the S-curve that you spoke of, I think we are at the cusp. We're using the data, we're making decisions, but we're also using traditional modes as a fail-safe. The minute our portfolios start to look good after a 3-4 year history, you will see banks being far more aggressive than they were, and the difference then will be the model. Which bank gets their model right and which bank fails.
We love the word banks getting aggressive. So, you know, I'd put 3 pointed questions to you guys, right? And then maybe help us summarize after this as well. So what's the one thing you think is broken? I think you guys have alluded to some of them, but you know, maybe help us summarize. What's the one thing you think is broken in supply chain right now?
I think if we were to summarize all that's been said thus far, supply chain finance hasn't traveled very well up the tiers. What's broken is visibility. The anchor has no visibility on the transactional history between a tier 3 and a tier 2 supplier, a tier 2 and a tier 1 supplier. And because he or she has no visibility, he's not able to step in and make the change. So as with all the technologies that are available, as there is greater visibility on the deep tiers, you will find supply chains to be far more robust. Having said that, I must admit that the credit flow to micro, small enterprises has grown really well. That we are seeing 18 to 20% year-over-year growth in credit to micro, small enterprises. I mean, it's what, $300 billion presently, up 20%. At a large base, we are growing at high double digits. So things are getting better, but is it anywhere close to the size of the opportunity? A long way to go. And visibility is the way I think this will get fixed.
Nice, nice. Bertram, maybe I can pick this question with you. That what do you think is broken, right? Maybe hold the summary till the end, but you know, one thing that you think is broken right now in the supply chain, financing.
I would say information asymmetry. It's still something which is only privileged to entities closest to the supplier. And that's something which I feel if it's opened up and democratized in a way which is also consent-based, that would be great. That would be the core of the problem. If I were to just give you a related analogy, in the agriculture sector, very similar to how we have the account aggregator, there's something that's being built by the central government called AgriStack. There's been a lot of mention of it. But what it's solving for is getting farmers' data, which is currently at various states, into a central kind of consented data exchange format. What this means is that tomorrow if a farmer wants to apply for a loan, there is ability for a lender to get access to this data with the farmer's consent and over a period of time to see all of the farmer's historical crop information, to see all of the land record information, all of this in a click of a button. Now, look how valuable that data becomes for the bank. And the bank does not necessarily need to have an existing relationship with this farmer. So this is how open data protocols, data exchanges, and consent, now that we are gradually also moving more into a DPDP world, there will need to be consent in everything that we own as data principles. Unfortunately, today there's so much of our data available out there which people go and get access to behind the scenes, right? Even today, GST, there are APIs which are available. MSME doesn't even know that his data is being pulled. So how do we create a world where the MSME has control over his data as a principle? And how does the MSME get choice? That's what I would solve for.
Account aggregator. But anyway. Anurag, your thoughts?
No, I think I'll sum it up. I'll just say verifiable data, which is by consent in deep tier value chains, I think is one thing that we really need to solve for. Once that is solved for, everything else kind of comes together in some form.
Perfect. Sounds good. Any closing thoughts in terms of what makes you excited about the future of supply chain finance here, right? Maybe, Anurag, can I start with you?
How are you switching off the mics, man?
It's your touch, Anurag.
Yeah, maybe people just don't want me to speak, yeah. But it's the rise of the platforms. And when I say rise of the platforms, it is both for a corporate, which is essentially like big corporates actually building their own platforms to drive value. Number two is open interoperable platforms, because I do feel that in the deep tier, the scale is not there enough. So I think how do you build these interlinkages across the value chains, which can unlock a completely different market in the last tier, I think is the two big things which I'm super excited about.
Yeah, okay, I'll go next and then pass it to Mayank. I think I'm super excited about the potential that we have ahead of us, because there's a huge market, the problem is well identified, we also have certain data pools which exist, we have certain frameworks which are already there. So what we need to focus on, like I said, I would love to get collective feedback, maybe not as part of today's conversation with so many people in the room, but if we can also hear voice of the industry to see what we should prioritize for. And we put that into a white paper and we put it into an action. That's what I would personally like to solve in the next 30, 60, 90 days. And if we are able to break this kind of walled garden of data and create information which is easily available both at the point of time of onboarding a new SME or a supplier, as well as the point of time of looking at historical data of finance, trend, and so on, that's something which would become extremely beneficial to not just supply chain finance, but to the overall impact of the GDP and export economy. Today, if I really look at the data at a macro level, you have only about 50% of the top, maybe 5 to 10% of the large suppliers who are actually exporting. And that's something which is a very skewed metric. So we would like to empower this middle to bottom part of the small supplier, empower them with ability to get easy access to finance and move up the value chain in terms of scale.
Mayank?
No, thank you. And we as Citi are very excited about the opportunity supply chain brings. In fact, incidentally, our global head of supply chain is sitting in the front row, and it's clearly the opportunity that brings him here, right? There was this famous book, right? Fortune at the bottom of the pyramid, right? This is exactly that, right? In India, the opportunity exists at the bottom of the pyramid. It was difficult to tap into because the cost of servicing that opportunity was higher than the opportunity itself. With all the tools that are now available at the disposal of banks and financiers and suppliers themselves, we can digitally solve and tap into this opportunity at a fractional of the marginal cost that we used to take. So very bullish about the opportunity. I go back to the $200 billion that Anurag spoke of. I think this is a significant opportunity that will be great for the financiers, the banks, the suppliers, but the country and the economy more broadly.
Can't agree with you more that you know, I mean, at the end of the day, all the innovation that is coming in, all of the data, the access to data, the affordability of that data and the access, the end beneficiary is going to be the MSME and then the business segment in the country, right? Which is very heartening to hear. There are multiple different ways of solving the problem. People are, you know, you guys are solving from top, we're solving from the bottom. You're helping us put the infrastructure together. You're keeping us honest. It's great to host a panel like this. Thank you very much, guys. We have maybe a minute for one last question. If we can take a question.
Yes. Can you please pass the mic?
Yeah, I think we have a lot of mention about both the size of the market, 250 billion, and the lack of penetration down the chain. Do you think the recent announcement about the ULI will make a big difference in what UPI did to payments will do to lending, ULI will do to supply chain and lending?
Yeah, so I can just bring in a little clarity into the thinking behind ULI. It again solves more for information being very scattered. So today ULI already has a bunch of pipes which are digital enabling to any financier or business looking to onboard a customer. You have KYC pipes, you have data pipes of the GST, you have data pipes of validation services like your PAN validation and so on and so forth. It's still in early days. They also brought in land records and so on. But I would say that it's at an inception stage of the thought process. Today, the biggest issue is data standards. Now, ULI is trying to solve it in a different approach. Earlier it was called frictionless credit platform. Now, ULI is trying to say that any lending use case, as a lender, you come to this platform, you have easy access to all those pipes. It does not mean that those pipes are not accessible directly bilaterally, but ULI will also bring in the element of trust. So as Protean, we power a bunch of these APIs and services under the platform already today. And we think there's a huge opportunity, like I was talking earlier, to bring it more under a consented framework. The way the account aggregator and the way the agri-stack has taken the approach to data principal consent, if some of those characteristics and learnings can be brought into it, I think it can be a fabulous DPI.
I do realize that we have a lot of questions, but I would request all of you all to take the question while we have the opportunities to network outside. Right now, please give all of our panelists a huge round of applause for giving out so many informations and being so interactive with us. I would request all of you all to come forward for a group photo.